What's up guys, it's Prashant here. Welcome to my YouTube channel and thank you for joining me today. 2 weeks ago, I released a video on Hertz warrants and it seemed like people were pretty interested. So I'm back today with another update on Hertz. Just a few days ago, they released their second quarter earnings report and they announced their Re-Ipo. If you don't know what a Re-Ipo is, hang around till the end. As a quick background, Hertz is one of the largest car rental companies in the United States. Last year, they went bankrupt and they recently emerged from Chapter 11 bankruptcy with a financial restructuring. If you haven't seen my video on Hertz warrants, you should go and watch that one after this video where I explain what that restructuring was and what the deal was that the investors got. Okay, now that we have the background out of the way, I'm going to be talking about the Hertz earnings report right after you smash the like button and the subscribe button. Seriously, you guys, I'm really close to 200 subscribers and it would mean a lot to me if you subscribe. So I'm just going to wait a second for you to subscribe, okay? Alright, here we go. Let me now throw up the earnings report on the screen and go over it with you. The first thing that I want to do is read this little statement from the CEO, Paul Stone. I quote, "Hertz delivered an outstanding second quarter as travel continued to rebound. With resurgent demand and tight supply across the industry, we remained agile in maintaining our fleet to meet customers' needs. At the same time, we benefited from the important operational and financial improvements we made through our restructuring process. Our improved financial position and capital structure give us the flexibility and resources to build upon our strengths and capitalize on accelerating momentum in the quarters ahead." Now let us look at some of the numbers in this report. The first table here is numbers for the second quarter for each year, 2021, 2020, and 2019. I think for the most part, it is more beneficial for us to compare the 2021 numbers with the 2019 numbers, and for the most part, ignore the 2020 numbers. Obviously, for a car rental company, the numbers will be low for 2020 because of the lockdowns. So, the total revenues in 2021 were $1.6 billion compared to $1.8 billion in 2019. So they're almost back to 2019 levels, which is really good. Their adjusted EBITDA, which is earnings before interest, taxes, depreciation, and amortization for 2021 is $664 million, compared to just $166 million back in 2019, which again is really good. Next, we see that their vehicle utilization is 78% for 2021, whereas it was 81% back in 2019. So this means that their fleet is booked 78% of the time. Now, if you've seen my last video on Hertz, you know that Hertz has downsized its fleet a lot during the bankruptcy process, which we can see over here. The average number of vehicles in 2021 is 350,000, compared to 575,000 in 2019. So how are their earnings so much higher when their fleet is so much smaller? Well, if you look at the total RPD or revenue per day per car, you will see that for 2021, it's $65.42 compared to just $42.71 in 2019. This is the single biggest factor why Hertz is doing so well right now. You probably know that there is a global chip shortage out there right now, which has caused the supply of new vehicles to go down and the cost of new vehicles to go up. If you've tried to rent a car within the last year, you've probably noticed that there are far fewer cars out there to rent in the first place, and the price to rent each car has gone through the roof. So this is exactly what Hertz is capitalizing on. Hertz is able to charge its customers much more money per vehicle day rented than they were back in 2019. In fact, they're charging about 1.5x of what they were charging before. Now, if we scroll to page 3, we can see that they show us an earnings per share of negative $1.05, or basically a loss of $1.05. Now, if we compare this to the second quarter of last year, it was a loss of $5.86, which is a huge improvement. Okay, so Hertz is out of bankruptcy and their earnings look better than before. So what's next? Well, on page 1 of this report, Hertz tells us what's next. Let's take a look there. We see Hertz says that they emerged from Chapter 11 bankruptcy on June 30th, 2021, and they anticipate a Re-Ipo, which includes an investor roadshow and relisting on a major exchange by year-end of 2021. Wait a minute, isn't Hertz currently trading? What is HTZZ? Well, yes, Hertz is currently trading, and you can definitely buy and sell HTZZ stock. However, it is currently trading on the pink sheets, which means it is not currently listed on a major stock exchange like the New York Stock Exchange or the Nasdaq. This means that inherently, HTZZ stock is considered to be a more risky investment and they will not be able to attract new institutional money like hedge funds and other investment institutions. So this is what Hertz is talking about when they talk about the Re-Ipo. They want to get relisted on a major stock exchange such as the New York Stock Exchange to be taken seriously and attract big money. As a part of this, they will also be doing an investor roadshow, which is basically them going to a bunch of different big money funds so that they can convince them to invest in Hertz one more time. So what will happen to Hertz in the future? Will it continue to do well, and will its stock price keep rising? Well, in the earnings report, they say, and I quote, "We are optimistic about a sustained recovery and travel rebound." Well, this is the biggest risk to Hertz. Up to a few weeks ago, it was pretty evident that the United States was opening up more and more, and a robust travel rebound was definitely on the cards. But in the last few weeks, we have seen that this new variant of the illness is spreading, and we are seeing more and more mask mandates and some travel restrictions. Here in Chicago, we have 31 states on a travel advisory, and unvaccinated travelers coming in from any of these states are required to quarantine when they get here. If this trend continues and people stop traveling again, Hertz could be in big trouble. In fact, this is what sent them to bankruptcy the last time. Unfortunately for Hertz, this is an unmitigated risk. They have no control over how the illness spreads. And because their business is not diversified, they're completely dependent on travel for their business to thrive. It looks like they have a good balance sheet and they are doing well currently. But if travel trends do not continue to go up, Hertz could be in very big trouble again. If you're a Hertz warrants holder, I think the best play would be just to hold on to your warrants for the next year or so, or at least until it gets relisted on a major stock exchange. It is quite possible that once it gets relisted, the stock price might go up regardless of the underlying business conditions. At the very least, total market index funds would likely buy Hertz stock on a market cap weighted basis. If the stock price of Hertz rises, you could exercise your warrants to realize a quick profit. If you want to learn more about this, go back to my earlier video on Hertz warrants where I explain this in much more detail. So that's all I have for you guys in today's video. I hope you found this video entertaining and useful, and I hope that you smash that like button and the subscribe button for the YouTube algorithm. Also, go ahead and click the bell icon to be notified instantly when I post a new video. I post at least one new video every week with great new financial content, and I would love to see you back here. Also, go ahead and follow me on Instagram, TikTok, and Twitter. Links in the description down below. Thank you so much for watching, and see you next time.